Brijen Puri, Head of Markets with JPMorgan, joins us now. Brijen, good morning. Thank you for joining us. The rupee is just not responding. Why is that?
Hi, morning. I think really in terms of just trying to decipher the market reaction, I think the market seemed to have been looking for more big bang announcements from the finance minister, either on a large chunk of goods being brought under import duties or on a sovereign bond. However, I think personally, I think the market is really missing one small point. The disappointment up until now was a lot because while we had a lot of platitudes from the authorities, we did not see a concrete plan in terms of how the government and the RBI plan to achieve stabilization of the rupee. I think what has been announced yesterday by the finance minister is a good first step towards that. Breaking down the current account, trying to give a target of 70 billion. We can always quibble about the last couple of billion or 3 or 4 billion, whether it's achievable or not. But I think the important part is that there is a realization that we need to not only get more debt to finance the current account, but we need to tackle the current account itself. So, the gold imports, I think the assumptions around the gold import is something which is definitely achievable. The assumptions on how the oil imports will come off are not entirely clear, but I think that is very dependent on the external market, on how crude behaves in the coming few months. Also, in terms of the financing, I think while tough and daunting, it's not something which is entirely unachievable. That's on the capital account, the ECBs, as well as on the FDIs. So I think all in all, the market was expecting something bigger. But personally, I'm happy seeing the plan which is there. Of course, we need a little more detail on how we plan to reduce the current account going forward. So while this is a plan on how we get to 70 billion this year, I think going forward, what we need to do on exports and imports on a sustainable basis, that really is the next step which we'd be looking for.
Do you think the big chink in the armor in FM's assumption is that he is not betting on any kind of FI outflows? The assumption here is that this year we will not get any inflows. But what if we start getting outflows? That certainly will change the equation by $10 billion.
See, I think really that is an assumption. It's very difficult to call on that because it's entirely outside of the Indian authorities' purview. It's in the current scenario, it is very, very dependent on what the Fed does in September, and more than what it does, what the tone is and what the guidance is going forward. So while that's very difficult to predict, yes, on the negative side, one can always assume that there would be outflows. But I think even assuming a flat FI portfolio, it's a reasonable assumption given the current scenario. Of course, like you mentioned, that could change should we see a markedly more hawkish Fed than what is currently priced into the market.
Reports have also been indicating that government perhaps could increase the duty on gold to about 2% to curb imports. Do you think this is a move which would work?
I think gold really is treading on a fine line because you don't want to increase the duties and make the operational process so cumbersome, such that a large chunk of the volume moves into the black market and encourages import through various routes, smuggling, etc. So I think the gold assumptions are reasonable. We've seen a correction in the global gold prices also. I don't think there is as much speculative demand for gold this year as it was last year. People predicting last year that gold will go to $2,000, $2,500. But today, with gold hovering around the $1,300 mark, it's a lot more reasonable and easy to do. I think the important part is really on the other imports. What do we do for oil? Of course, politically, it will be very difficult to work on a steep increase in diesel prices, as that would also choke growth. But I think some of the other items on the import bill, be it fertilizers or iron ore scrap, those are the kind of things which probably need to be attacked next.